Back, everyone, to our weekly market update. Today, we're going to be going over several different things. Number one, Bay Area single-family home prices jump 14% in 1 month. Are San Francisco condos about to be back on the rise? What is going on in the city of San Francisco? Are there a lot of people moving back? California real estate. California gained $20 million cities this year, including 2 more in SF metro area. We got a lot to cover, but we're going to first talk about the prices of homes. Here is the article of the week, and if you think this is bad, or if you're surprised about this number will get even more significant once you look at the numbers for March, and then once you look at the numbers for April. So let's take a look at this article. Bay Area single family home prices jumped 14% in just a month. Bay Area home prices increased in February. Remember, this is February data. This is actually old data. We're already at the end of March. So I'm going to show you what you can already expect in March, following a statewide trend according to a new report by California Association of Realtors. The median price of an existing single-family home in the Bay Area in February was $1.25 million, up from $1.1 million the previous month, and higher than the $1.02 million price 1 year ago. Statewide, the median price of an existing single-family home last month was $806,000, up from $789,000. You can see the trends have been going on for most places. There hasn't necessarily been one that has projected a lot more than others, and that's kind of been the interesting part. While the commute back to offices is real and the commute is a factor for people, there's still a lot of people that are willing to make some sacrifices for a bigger home. And the reason why this is all happening, and there's a big increase, is several different things. Number one, the biggest reason is because the stock market has done really well. And we're not just talking about NVIDIA employees that are buying up homes. NVIDIA has 40,000 employees. It's not even that much relative to all the jobs and all the opportunities. However, the general markets are at all-time record highs and continue to do so. So in general, there's a lot of money out there. There's a lot of confidence. People have been waiting for some time. And the slight good news too is that there's a lot more homes that come on the market now than you have experienced last year in the same time. We're talking about 15% plus more listings than the same time last year. But the downside is for those that are buyers, that is also something you have to face. The reality is just because you may have more money now, so do a lot of everyone else and your colleagues. Now, the thing that I want to showcase about this, though, is this is the stat for February. And I want to show you already a little bit of a sneak peek because I have access to it before these news articles do, because these news articles are usually reporting on things at least a month old. Here's the stats for Santa Clara single-family residential. Remember, these are all transactions that have actually occurred in the previous month, right? So the previous months are February. These are February transactions we got pending in February that are closing in March. And you can already see that the numbers are at certainly a 12-month high, even higher than the previous year so far. Now, it's a big increase from February, and the February is what has been reported. There was a jump between February and January, which is very common because seasonalities. But a lot of things that I brought up week after week on this show, things have just been earlier. Now, they still have a lot of runway. Go to any open house. You will see a lot of people. Make an offer for a home. You're going to see 10 plus offers. That is not unusual. Now, it doesn't mean it's impossible or it's hopeless. No, you still have opportunities. You still have the ability to buy. You still have plenty of choices, but you have to be incredibly realistic about what your budget can afford and what will work or not. Because you can see these are the March numbers that have sold from February transactions. When you see the April numbers, it will be higher than the March numbers. How do I know? We've helped at least 6-7 people get into contract this month alone. And we know what the comparisons were of what has sold recently, and they are significantly higher than what has sold before. So those will then become public in April. And a lot of people that are active also understand that, and they will be bidding on top of that. So it will eventually slow down. It may eventually change. And this actually leads up to another question that some people have is should I wait and see? The answer is you don't know when the peak of this mountain is. So you can be like, look, I'm going to wait and wait and wait. And maybe it can go down, but the question is it down like here, right? Still higher than what you see today? That you have no idea. And you won't know until things actually, if they do go down and by how much. So rather than doing that, especially right now, you have a lot more new homes that come on the market. You can take a look at this, right? Number of new listings. Let's just compare for the last 3 years so you can see the data itself. You can see in general, like it goes back to what I just mentioned before. This is the number of Santa Clara County single-family homes. The stats are higher, right? Look at February. It is higher, 806 versus 646. January, 582 versus 498. The numbers are all higher than what you've experienced last year. They're not going to be the same as 2022, just mainly because those are much lower interest rate times. But they are still a lot better than what you see previously. You can also kind of track when have the busiest times been. They're basically now. March, April, May, they tend to be the busiest times all year. You have a little bit of bump that occurred in August, but outside of that, the numbers actually start dropping down after the May season. So for those that are actively looking, yes, it is going to be competitive. It's so important to try to win it. It is certainly doable to win it, but you got to really factor understanding the market, having the right strategies, having the right game plans to give yourself the highest odds of success. But this is very important. Just be mindful in terms of activities. Next, are San Francisco condos about to make a comeback? Here's what the data shows. Much like everywhere in the Bay Area, things have improved significantly. Now, San Francisco condos, though, have been far worse than everything else. And the reason is several things. One, they've actually built a good amount of additional inventory throughout the years. And so there's a lot of supply. There's certainly be a lot of people that say, look, why would I want to pay for a condo and pay this kind of HOA? Because the HOAs in San Francisco are significantly higher than every other place in the Bay Area. The cost is higher. They may have a door person, right? Like there's all these factors that are attributed to being in the city. So for a long time, people are like, what's the point of being there? However, this AI change and this activity is not going anywhere anytime soon. You may think of it as pure hype or not. The reality is it's a very, very significant computing shift that we're all experiencing. And so a lot of people may say, look, I want to be in the center of that. Where is the center of all the things that are happening right now in the entire country, entire world? It's in San Francisco again, right? It's in San Francisco again. All the companies, all the activity, all the meetups, all the events are still there. And so I see a lot of people just kind of going back. Now they may be renting. Some may be settling down to buy a place. It doesn't have to be a condo that they buy. They can obviously buy a single family or these other assets. But in general, a lot of people have been moving back to settle down there to just be in the mix of things. Because if you want the opportunity to do well, then you may as well be in proximity of those people doing well. The other thing that's also important for people to also understand is, look, there's all this myth that condos do not appreciate. Take a look at all these public stats. That's not true. Look at February 2020 to February 2024. This is just condo. This is not single family. And in 4 years, how much did they appreciate for some of these assets, right? For some of the most dramatic ones, which is a lot in the Tri-Valley, you can see they've increased 36, 33%. That's equivalent to about 8% a year for a condo. So don't ever make the excuse that you say, oh, condos, townhomes, they don't appreciate, I just want to buy a single family. You can see that they still have done quite well. Now let's kind of take a look at the scope of it. You can see the ones that benefit the most tends to be the ones that are a little bit further out, right? They're a little bit more affordable. People had a little bit more flexibility. But you can see just across the board, there's a lot that have still done plenty fine. San Jose, it's about 15% over the last 4 years, about 4% increase. You can take a look at the biggest unfortunate ones. You can see the ones that didn't do that did some of the worst are actually the ones that are the most expensive. Because if someone had the ability to pay $1.4 to $1.6 million Los Altos, they may have chosen not to at that time. Now, this is not an accurate forecast of what the future will look like. My assumption and my guess is that a lot of these prime areas that are actually in good locations may be reversing in terms of value, and those that are further out may not be. And the reason may be because people want to be back in the proximity of things. So it'll be more interesting will be to see like February 23 numbers to the future. But you can see some of these places have been hit hard, and these are typically in the past like the better spots, like pre-COVID, some of the better spots. You can say San Francisco has actually declined since 2020, right? East Palo Alto is different. There's not that many condos there anyway, so this is not a good stat. But you can see San Francisco, Oakland, they actually went backwards versus some of these other cities also did the same. But some of them was also, there's not that many condos there to begin with. Like, for example, San Carlos, there's not that many condos there. Belmont, there's not that many. So some of these stats isn't too helpful. But for those that actually have a lot of condos, it's something good and just be notable to see. So we do see that reversal of the trend. You can see 2021 numbers to 2022. 2022 to 2023 had kind of the low time, and then I do see it increase, and you do see this happening across real estate across the board, that in general things have been increasing. They've been increasing the slowest, to be fair, and I don't expect things to be a crazy hot market or anything like that, but for sure you will see more people entering back into the market. That is their starter home. They want to be within the activity of things, so this could be a good opportunity for those. Last but not least, I want to just kind of point this out and also celebrate this, right? On one end, people complain about things being too expensive. But on the other end, you got to think about why. California gained $20 million cities this year, including 2 in SF Metro. And the biggest stat is this. We already know about these really nice areas. We all know about Atherton, Los Altos Hills, Montecito, Hillsborough. Like, these are some of the best places in the entire state, but also certainly the entire country. But the biggest thing I want to showcase is this. California as a whole gained $20 million cities between January 2023 and February 2024. While the San Francisco metro area gained 2 in the same time period. Of California's $210 million cities, 69 of them are in the SF metro area, while the Bay Area as a whole has nearly 100, nearly half of California's million-dollar cities. For comparison, last year, California had more million-dollar cities than the next 6 states combined, right? That's absolutely incredible. Now, are people being foolish at buying these properties? The answer is not necessarily. People are just earning a significant amount of money by being here. The opportunities are here. If technology is going to continue to gain a bigger market share of the overall GDP of the economy, if that is how the US can compete against the rest of the world, if AI is the next frontier, whether you think it's going to be as hot as it is or not, will it have a meaningful impact? Is it the next computing shift? If the answer is a slight yes to all of them, why would you not want to be in the mecca of it all? And that's what people are doing, right? And they're even confident to not just have their roots here, they have the confidence to even buy a property and actually settle down here. Now, no, not everyone has a green card. Not everyone has a lot of clients that are buying homes have an H-1B, but they understand, look, at the end of the day, the values of the Bay Area have done very well in the past, has always been expensive, but continues to do very well. If the future and the opportunities are here of your current job or your next job, why would they not have the confidence to settle down and invest in a property here? And that's why you see what you see. And the other small nugget that I shared with a lot of clients recently this week is like, take a look at some of these very nice markets. Think of like a Palo Alto as an example. Palo Alto, if you did not know, has some of the best schools in the area, but 50% of Palo Alto are actually renters. Now, it doesn't mean there's a lot of apartments. You know, there's not many apartments in Palo Alto. They're renting out single-family homes and other people's homes. So if they're renting out people's homes and 50% are renters, that also means many people that live in Palo Alto, as an example, own multiple homes, right? They own multiple homes. They continue to build up this asset class. I had somebody call me this week because I sent a mailer. Like, she has a place in downtown Mountain View, and she was like, "Wow, this just, it was a tiny home. It was like $1.7 million for this tiny home. It was basically going to be a tear down on a small lot, 3,000 square foot lot or something like that, near downtown Mountain View, near Castro Street." And she's like, "Wow, that home went for 1.7." I'm like, "Yeah, that's incredible, isn't it? Are you thinking about selling?" She's like, "No, Spencer, I'm 70 years old. I own a lot of properties in downtown Mountain View. in College Terrace, in Palo Alto, I'm never going to sell. The only times I would potentially sell is if I pass away, my kids want to sell. And that's the interesting part about it, right? Like, it's a lot of people own a lot of properties here. And so because of that, and because they're not distressed, they don't need the liquidity for anything. Like, they said, I have so much cash. I'm not going to buy more real estate. I'm just going to sit on this. My properties make a lot of money. They bring a lot of rental income. So people just have to really understand that over time, that's kind of what happens. And so some people are able to accomplish that today. Some people are just starting their journey today, but you just have to understand, like, that's why there isn't that much distress. Like, one, there's a significant amount of equity in people's homes. Two, for those that have owned it for a while, like last 10 years plus, like, their rent can easily exceed their total expenditures. And so that's part of the stickiness that you see of these low inventory and low turnovers. To give you an idea, when realtors like myself are trying to figure out where should we be sending out mailers, we're trying to find farm areas, kind of like a turnover rate of usually like 5% plus. That's very, very hard in the Bay Area, by the way. There's not that many that are like that, just so you know. And in most other places, they have more of that volume. But in good areas, and this doesn't have to be anything crazy, even like good places in Milpitas, nothing crazy. Milpitas, Mission San Jose, Los Altos, Hillsborough, these places, like good places, whether they're really good or they're even just good in that local vicinity, right? The turnover rate of those are barely at 1.5%. So it's 3 to 4x less than what people that are willing to spend money on sending mailers are even hoping for, right? So this is not it's not an artificial low inventory environment. This is the reality environment, right? This is the reality of what you need to understand. And so the tip for everybody that's actively thinking about two things. If you're thinking about buying, think about expanding as much areas as you can. Get into that place. Down the road, you may choose to be like these other people. Keep it as a rental or sell it to buy the next one. Use this as a stepping stone. If you're a seller, clearly you can see the market has been doing very well. There are people that are at a specific age. Maybe they want to sell to give the money to their kids. Maybe they want to take care of the benefits of the retirement age. Some people can sell, keep their low property tax basis into that next one, right? That's also a very important thing. Then you can have the liquidity to then do whatever you want. Go travel the world, go put more in stocks, whatever it may be, right? So these are the general strategies that I'm telling people to do depending on your own situation. If you want to set up a call or text me 408-547-4590. The market is super active right now, as you can evidently see. Love to help you. See you in the next one. Bye now.